Welcome to another episode of Motivated Masculine Men, where we help to inspire, educate, and challenge men to embrace healthy masculinity, deepen their relationships, optimize their health, and step boldly into their purpose. Today, we are talking again to Stephen Edwards, who, if you missed the last episode a couple back, we talk all about all sorts of different, very good insights for the masculinity side of things, for providing, protecting, and presiding. Today, we're going to talk really about that providing side of things and presiding. The provide side is today all about financial side, leveraging money, asking the yeah buts when you look at those rich people talking about how they don't pay taxes, and really how to leverage the money even at the low level or lower level of say $65,000 a year, where you're just covering your bills on the important things and the important aspects. He has a lot of insight from many years. We joke about things, we talk about things, but I want you to really come at this with an open view, an open eye. So without further ado, let's get started. Let's go talk to Stephen. And I thank you. Make sure you share to that one person that pops into your head, if you do have that during this episode. Thank you again. Welcome back. So here we are, Motivated Masculine Men. We have Stephen Edwards back again. He's going to talk to us about something different today. So men, women, even if you're here, but definitely we're going to talk about how to leverage and how to look at your financial side of things so that you're not spending time doing the things that aren't important. I guess that is that summing it up there, Stephen?
Sorry, I wasn't listening. I'm kidding. I'm kidding. Yeah, yeah. Yes,
Uh,
that would be great, man. Yeah, that's going to be what we're going to do. That's what we're doing.
Yeah, I know. So we had an episode just recently, a couple back from this. So if you want to go listen to that one, where we talked all around, men and masculinity and how to really focus on yourself, on your relationships. Stefan talked about his past relationships that didn't go so great and what he learned from them. So really go check that out. But during that, we got there it got brought up around like investing and the importance of leveraging your time. And so I have so many questions because I watch so many podcasts on this, and I always go, but. And so I'm looking forward to Stefan kind of telling us his insight, and then me asking the but questions, and going from there. So I also love to learn this stuff, so I'm really, really interested in learning this so that then I can try and implement it because again, it is all about that leveraging time. I've run my own business. I'm now working back for, you could call it back for the man. Enjoy what I do every day. But again, you only get a salary. You only get so much. So you've got to do these different things to leverage that because your salary and just making money is not going to set you up for retirement. You're never going to save enough just by saving and putting money in the bank to be able to retire, unless you're making multi-million dollars. Yeah, it just is not going to happen. And I think you agree with that, Stefan?
100%. It's pronounced Stephen, by the way.
Steven,
Just so
sorry, why
it sounds like, it sounds like
again,
it's with a
again, with the name, well, we had the same thing last time. I don't know what is wrong.
well,
It's probably all those
last time it was
vodkas I had
last time it
yesterday.
was more you calling me old. Actually, last time it was more you
That's fine.
calling
You're
me.
still old there,
Yeah.
Steven.
So I
Still
can
old.
probably have Stephen better than old. Anyway, but I know the old jokes are going to come up at some point. But that's okay. I'm open to it, man. I can take it.
You can
All
call me
right.
young and unknowledgeable. So there you go. We'll just call you
There you go.
knowledgeable
Well,
now.
that's why you put the glasses on this week, is because you
Yeah.
want to
Oh,
look like
I completely
super
forgot I left them
intelligent.
on. Yeah, exactly. I need to be intelligent for this episode, definitely.
Okay, man. We're gonna rip each other apart for the next hour. I'm looking
Yeah,
forward to
get ready for it, people. Get ready for it. It was
it.
fun last time. I can only imagine what it's
Yeah.
gonna be like today.
Yeah. Now we know each other.
Mm. Okay, take it away, Stephen. You got that
Okay.
right
Well,
this time.
ask me a question. We ask
Well,
me a
I guess the
question.
question is like what is it that where do you start? So when I'm earning, I'm gonna just throw a number out there. This is not what I'm actually earning, because I know that colleagues watch this, so I do have to be careful of that. Um, but let's say I'm earning $65,000 a year. I am
Yeah.
enjoying what I do. I think it's the average wage in the US, about 65. Enjoying what I do, but at the same time, I mean, I'm 39 now. I only learned about a lot of this stuff 5, 10 years ago, so I have been, investing, saving, but I'm earning $65,000 a year. My partner is earning 65, so we've got a household of 130,000 dollars a year. We've
Yeah.
got a mortgage. We've got all these different bills. We've got, maybe let's say we have kids. I don't have kids, but we say we have a kid or two. All the money that comes in goes straight back out. So it can feel, I know for myself even, it can feel I'm in a good position, but looking at friends, how do I leverage this money? Like you say, okay, cool. I'm going to leverage more money so that I have more retirement. Yep, it's going in the US, my 401k, here, my Kiwi saver, wherever else you have your superannuations, you have all your things. Yes, you have that, but you look at it and it does not go up very quickly. Like, let's be honest. Like you look at it, you're like, well, what's the point of that? I'd rather have that in my bank so I can buy more food or I can buy, the things that I need. How do people go from that to anything else? I guess is
Yeah.
my first question because I watch the guys talk about and they're the multimillionaires and I'm like, yeah, you've got extra expendable cash. Come on, dude. Like, let's get real here.
Okay, all right. Well, that's a perspective, but
Yeah,
but let's talk about it. Now, first of all, a lot of this stuff is so basic. It sounds like, "Tuh, that's not amazing. That's not mind-blowing." Well, making money happens over time, right? It's like I think we mentioned last week when you find somebody that suddenly becomes a star in a movies or becomes very successful and they say, "Oh, they're an overnight success." Never happens, right? What's the saying? It takes 10 years to be an overnight success.
mm,
So you're building all that momentum over time. And the same thing is with investing. Now, there are a few tricks of the trade, but there's also just some basic things. And, like you said, this is incredibly important because we are and have been for the last 25 years moving to an entrepreneurial society. So many people now are finding a way, as you are, right, to make money from home and doing the thing you're really passionate about, right? There's never been a better time to do that. You and I were just talking about AI earlier. And so people need to get informed, understand, and be able to use AI. If you don't, you will be left behind. It's as simple
agree.
as that.
Totally
So
agree.
we can create what do they call it? A unicorn company. That's $1 billion company in an extremely short space of time with two people, starting out with nothing. So we know that it's possible to get a business going with very limited funds, and you're proof of the pudding there too, right? So, but in terms of investing and building for the future, yes, your business will do that for you. But in the meantime, a couple of things, a couple of basic principles, right? So first of all, whatever you're paid, you pay yourself first before anything, right? So you take 10% of your income before taxes and you invest it. It doesn't matter what it is. It's just whatever amount it is and you invest it. Now, you mentioned about government programs, institutional things you can put your money. Here in America, we have IRAs and 401ks. I don't know what it is in New Zealand.
KiwiSaver
Um,
here. So, and then Australia, I know is super funds. So for those Kiwi and Australian viewers, that's what he's talking about when he says 401k and IRAs.
I okay. So what would be an average rate of return on that annually?
So if I look at my Kiwi Saver, and I'll be open here because I know this is what we're here to talk about today. So my Kiwi Saver, I actually put more in than most people do. So the minimum is 3%. I think the government's just looking at changing it to, yeah, it's still 3% contribution from me. Then your employer gives you 3%
Nice
as well.
check.
So
Yeah.
they add 3%. Some employers will have that as they'll add that as part of your salary, or it'll be included in your salary, or it'll be on top.
Yeah.
Uh, so you've got 6% there. I add more in for my contribution. My return on it because you can put it into different managed people, different companies can manage it for you. So my one currently that manages mine, I have on mine, actually, here we go. I'll tell you the exact numbers here so you can use these. Uh, and again, I want to be transparent here because I want it to be real life. So my it's dropped recently, but my last 12 months is 3.5% return. So my 12-month return after fees and tax is 3.5%, it's saying. Since inception, which I put this in, I started at this company. When did I start? I think I've been there 3 years now. I'm up
Mhm.
7%.
Okay. All right. So, like you said, when you brought this up, you start to look at it and you go almost thinking, what's the point, right? So if you're only growing, even if you're growing at 7% a year, it's barely covering inflation. And I don't know what
Yeah,
inflation is in New Zealand, right? But over here in America, they'll tell you it's about 3%, which is complete bullshit,
I
right?
agree with
But
that one.
they just take a basket of stuff that you may never even buy, and they say, "Oh, the rate is this." It's a
I can
joke,
I
right?
can t I can tell you this since COVID, so since 2019, I come back to the US a lot. The price of things on a menu in a restaurant has
Yeah,
gone up at least 25 to 30%. Because
absolutely.
I used to pay attention to it because then we have to pay exchange rate, all this. Your prices
Yeah.
on your menus are the same, and we used to complain about how expensive our prices on menus are here. They are the
Mhm.
same in the US in most places as we pay here, but then I have to double it pretty much with the exchange rate and then
Yeah.
pay tax and tip on top. My price that's on the menu is what I pay. I don't add tax to it. It's already included,
Yeah.
and then I don't have to pay tax tips here either.
Yeah. 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 So you get it, man. It's like,
Yeah.
any government is going to want to make things look better than they really are, right? It's just that simple. But the bottom line is, if you're making 7%, you may actually, if you really do the math, on your basket of goods, right? Because we don't all use the same amount of gasoline. We don't use the same amount of about anything, right? Food, whatever, right? It's all different. So, and it's a very difficult thing to do to calculate exactly what you spend money on and then how much that's gone up in the last 12 months yourself, right?
Yeah.
And that's why they give you this data, which is complete bullshit.
Yeah.
So really at 7%, you'd be lucky if you're treading water and you're not making any return on your investment. So what I would say is, look, there are lots of things that have done well over time, traditionally, like stocks, right? Like we have over here uh, the Fortune 500, right? That you can just invest in the Fortune
S&P 500 is,
500, 500,
yeah,
right? Yeah.
it's layman's terms
Uh,
are
so over time, you're going to get a much, much higher rate of return than that. Okay. But then you've got to educate yourself about investing, right? You can't just expect to, we don't learn this at school, right? I don't know about you. I don't remember an investment
it's
class in
something I
school,
talk
right?
about with all my friends. Why did they not teach me how to do this investing when I was in high school? Like this is the most important stuff.
Yeah,
So
because
I'll
they never
say it
wanted
right
you to
now.
do.
This episode is going to be important for your life if you like just again take one thing away from it.
Well, we're going down the conspiracy tunnel, right? The avenue, right? Because they never wanted us to be investors. They wanted to train us to go get a job, right? And I say to people when I'm doing events, I say, now let me ask you a question. Do wealthy people send their children to different schools? And everyone goes, yeah. And I go, why is that? I go, it's because the school lunches are organic, right? And people laugh, right? They go,
Yeah.
school lunches are organic. It's because they're teaching them a different set of life principles,
Yeah.
right? And that sometimes it's not even what you know, it's who you know. So all those wealthy kids are going to schools together, making friendships that they will use and
The
leverage for the
leverage.
rest of their lives, right? But they also teach them how to invest and what it's all about. And so, and this is important. So if you don't, most people don't have a financial statement. None of us were taught how to create a financial statement as a kid,
No,
right? So
no.
what I would recommend you do is create a financial statement. And if you want guidance on that, the best book I can think of that takes it at a very basic level is Rich Dad Poor Dad by Robert Kiyosaki.
Yes.
And he goes through this basic stuff of creating a financial statement so you can see what your self-worth is, your net worth, you can see where your money's going. Most people are making money with a job, and that's it, right? They're making money with a job, and then that pays for all their expenses, and that goes out the window, right? So, what we have to do in order to create wealth, this is not a choice. You have to buy assets. Now, and just to give you a sort of a bigger picture on this, have you ever wondered how wealthy people get away with paying no taxes?
I used to. I know how they do it now, but
Now
I
you don't
used to.
care anymore, right?
No, no,
It's
I
funny.
care. But for those that don't know, because I know again, I've done a lot of work on this. That's why you and I are having conversations about this.
Yeah,
Uh,
sure. Yeah.
for the person who doesn't, let's go down that.
All right. So why do you think that the wealthy don't need to pay taxes?
They leverage their businesses and their expenses as well as how they get income out of their business. Is
Okay.
in blanket terms. no, I know more than
You're
that,
right. You're
but
right.
yeah.
You got it. You got it. So what people do, these wealthy individuals, they buy assets. Okay, well, what are assets? Anything that you invest in that is going to increase in value, right? So they buy art, right? Art's a huge thing right now. You see these wealthy people buying pictures that just look like you could have done it in your back bedroom for $80 million. It's insane, right? And so you got things like, real estate, you got stocks, whatever it is, these assets, it's the key. Why? Or real estate, right? So what happens is when you have an asset that increasing in value, and as we print more money, right? This is why the money printing is so popular. Your assets go up and up in value, right? So now when your assets up in value, you said it, you can borrow against your assets, right? And what don't you pay on borrowed money?
Texas.
You don't pay any taxes, man.
Mm.
Right? So you borrow against your assets and continue to increase in value. You invest that money, which is now free money. Now people will tell you, and everybody's heard, there's no such thing as free money, right? It's bullshit. All money is free, all of it.
Mhm.
Not to you, because you're made to believe that you have to work for money. And if they didn't make you believe that, you wouldn't go get a job, would you?
No.
Right? So the sooner we figure out that we've got to make money work for us and we've got to take that money from our assets, borrow it, don't pay taxes on that, then reinvest that money. What's our return on investment now?
Yeah, it's pretty high. I do have a question about that, but I'm gonna let you finish your.
My train of thought. All right, but if you borrow money and you invest it, your return is infinite.
Yeah.
It's incalculable because you didn't put any of your own money into it. So let me give you another example. People say there's no such thing as free money. I'll give you the easiest um, analogy that will just blow your mind and you realize that all money is free. You have a bank account, right?
Yes.
Put your money in your bank account, right? So when you put that money in the bank, how much money does the bank give you?
Probably simpler than I'm thinking of it. But the bank gives you back what you put in,
No,
doesn't it?
well, they'll
No.
give you, well, it depends on your
They'll
account,
give you a
right?
little bit of interest, like, these days it's null and void and may as well. I mean, I'm gonna spoil alert, you're not gonna make a lot of money in your savings account.
Right. But they don't give you that interest. So let me explain that to you because that's a little crazy, right?
Yeah.
So first of all, though, you put the money in the bank. Then people say, well, I put it in a CD or whatever, or, I have a checking account that gives me interest. And I say, okay, great. When do they pay you that interest? The moment you put it in?
No.
No. They've had it for a while, haven't they?
Yeah. So they've been making
Pen-
money off of your money. That's how banks
exactly.
work. But
So
they
that's
use your
money.
money to then give it to me to all of us to put it into our mortgage, and then like, yeah,
Yeah, so you gave them your money for free. They
yeah,
went and used it to invest, and they gave you a tiny little bit of the money they made on your money.
yeah,
So when they've taken your money for free and they invest it, their return is infinite. It's incalculable
yeah,
because they never put anything into the investment. So what do you need to learn how to be? The bank.
yeah,
You learn how to be the bank. Use other people's money that they give you to get a return, but you're going to give them the return out of the profit you make. And so we're going to have to look at ways to get people to give you their money, right? That's
yeah,
another part of it, right? Of course, right? But the big thing is that these are principles to remember, to learn, and then figure out how to apply in your own life, right?
yeah,
And we're going to look at various ways you can do that. But we want to create a financial statement. We want to learn how to do that because now that's our report card. In the world of finances, you can't show them, report cards for school. In business, your report card is your financial statement. You
yes,
have to have you have to have one, right? If you don't have a financial statement, you're never going to get anywhere. So you can track what's happening to your finances, right?
correct,
So when you
definitely,
buy assets, you can loan against your assets, you can cash flow your assets, and so your assets are going to create income for you that is going to pay for your expenses to the point where you can quit your job. So it's going to replace the income you make for your job is going to be replaced by your investments, right? So like in real estate, you can cash flow real estate, right? You can rent it out, can't you?
Yes.
You can buy and sell assets. You can do momentum investing in the stock market, right? And create a weekly income out of that, right? Or a
Yes.
daily income, right? Now, I'm not suggesting everybody goes and does that out of the gate because you need to know what the hell you're doing. And even if you know what you're doing, you're going to make mistakes.
Yeah.
Nobody has a perfect record, right? Nobody does everything perfectly. Banks do not put all their money into any investment, no matter how good it is. They diversify the risk.
Yes.
So on the bigger scale, you see these big banks that are involved in buying and building a skyscraper downtown New York. Never does one bank invest all the money in that deal. You're going to see syndicated investing from many institutions and many banks. So they're not taking on all the risk themselves, right? So you got to figure out how much risk you can take. How do you know how much risk you can take? Because you look at what is my investment? What is my return on investment? What are all the upsides? What are all the downsides? What is the best case scenario? What is the worst case scenario? And how would I handle the worst case scenario? By the time you get to the last question, how would I handle the worst case scenario? If you can't handle it, if you mean you're gonna lose all your money, you can't do that investment no matter how good it is.
Okay.
So you never take on, as Warren Buffett says, you never take on more risk than you can handle.
Yeah. And everybody obviously, would you say that everybody has the same risk profile, or depending
No,
on where they're
no, no,
sitting
no,
at,
no.
or
It's going to change
everybody?
over time.
Yeah.
Yeah, it's going to change over time. You can take more risk once you've got yourself in a better situation, right?
Yeah.
If you're starting out with almost nothing, you want to take on the least amount of risk possible so you can grow your portfolio, right?
I want to talk about that person. That person,
Okay.
like I said, that person earning $65,000 a year literally feels like they're barely getting ahead. Yes, they have
Yeah.
money going into their 401k or their RRA or their KiwiSaver, whatever it is, but they're like, I have no extra expendable cash to like. That's what they're saying because I know we can always find stuff. But let's just say that they are like they've got two or three kids, and like, I mean, we all know how much money goes into kids. And they're like, I can barely keep my head afloat right now. We are eating the bare minimum to be able to actually even survive on that. How does that person start to leverage or start to get
I
into
don't care,
these?
man. I don't care. 10% to yourself first,
Yeah.
and then 10% you got to contribute to something, a cause that you've got a passion about. I don't care if you say you don't have enough money to live up. It's bullshit, right? You
We can
take
always
10%.
find it. Yeah.
You can always find it, right? So 10% goes to investing,
Yeah.
10% you give away, right? And people say, oh, well, that's good then, because if I give away 10%, I'll get 100% back, right?
Oh.
Yes,
Oh.
as long
Oh.
as it's done correctly. So let me explain.
All right, so what so let me just clarify real quick because I want to make sure I'm clear. And if I'm not clear, the audience possibly is not clear. So
Right,
and
right.
I know there's people out here out there watching right now that are like, yeah, no, I know all this stuff, or like, they
Yeah, yeah,
speak on it like
yeah,
yourself, they teach it.
right.
So
Yeah,
if you are that person, reach out. I want to have a conversation with you because I want to get obviously always get multiple different perspectives on things. But I have heard exactly what you're saying
yeah,
repeated 1,000 times. Like
yeah,
there's 1,000 different people out there that are saying the exact same
exactly.
thing. So what
Yeah.
you're saying is 10% goes into an investment or something, let's say S&P
You're
500.
you're gonna put that 10% into investments,
Yes,
correct?
so S&P 500, 10%, let's just use S&P 500 as an example. I'm not saying to go do that. You do your research, talk to whoever
Mhm.
you need to talk to. But 10% goes to S&P 500. Then you're saying another 10% is then going to these leveraging situations. These ones that you do a lot of you do research on, you figure out exactly where you're going to put it. That might be real estate, it might be this or that. Is that what am I hearing that correctly or am I hearing that
Yeah.
wrong with
So
you
the
shaking
10,
your head?
the
I'm saying that.
10%, the 10% that you take to invest could go into whatever you want. Could go real estate, could go stocks,
Yeah.
bonds.
Diversify.
The different, yeah, you want to be diversified, right? We're not going to get into too deep in that yet, but so the second 10%, Chris, is uh, to contribute to society, right? A cause that you want to give that money to, all right? So it could be, one of the things I'm passionate about is human trafficking, right?
Yeah.
So I give money to, but I don't just like give money to a cause like, you see these on TV,
Like
these,
the donations. You're not just
yeah,
donating it.
yeah, 9 times out of 10, those things are corrupt. right?
Yeah.
So you got to make
I'd
sure
agree with
you
that.
do your research. You got to research on a cause that's close to you and a charity that does things properly. And you can look at their books, right? And you can determine how much of the money you give actually goes to the cause.
So what you're
Uh,
telling me is it's 10% you're investing into whatever, which we'll get into, and then 10% is just you contributing. So it is money that you're not going, cool, if I put this money into um, Underground Railroad, which I know is a human trafficking that Tony Robbins is huge behind, Underground Railroad, anti-human trafficking. If you're putting the 10% into there, you're not putting it in there going, okay, cool, I'm gonna put this money in, I'm gonna put $100 in today, and I'm expecting to get 110 out of it in a year's time. It is a money
right.
that you're giving in because you want to contribute to a great cause and you're not wanting anything back in return from that company or that charity or
That's
whatever
how
it
it
is.
needs to be. But some people think if I give $100 away, I'm going to get a check in the mail for $1,000. That's not how it works, right?
No.
However, we've heard the saying, if you give, you will receive 10 times what you give, right?
So
And you do.
it's literally a contribution. You're not getting anything in, it's not an investment. It's not the same as putting the money into S&P 500 is what I'm trying to get to.
It is the same, and I'll tell you why,
Okay,
right?
cool.
If you do it for the right reason, Chris,
Mm,
if you do it solely to give back,
yeah,
that you're not doing it to get something, because that's not giving,
no,
right? That is giving to receive, and
yes.
your intention is to get more than you gave back. However, if you just give it to that cause from your heart and because you want to make a difference, you will receive 10 times what you invested. However, it will come in a way you might not think. And you,
That's where I was trying to get to. I was pretty sure that's what you were saying.
I
So
knew where you were going.
it's
I
that
knew you
like
were.
for me there's a company here that does called Takiwi Maya, and they do a house for um first responders, veterans that are struggling from PTSD. So they run a program, you can come and stay on site and all this. I know the founder of it. And so for me, I do contribute to them, not every paycheck, but I do contribute to them with there's certain things that happen. I go, cool, I have set it in stone that they get 10 to 15% of that, any of that money that comes in, I instantly just send it straight to their bank account. Not because I
Great.
want anything back, just because I'm like, that is a cause that I believe in and I want to help that cause.
Perfect. So good. So now, um, you've done the research. You know where the money's going. You know how much money gets to the uh, firemen or first responders and how they benefit from it. That's critical that you got to know that because if you just give money away to a cause you don't know about, that's not giving.
No.
It's not really giving, man. You know, you're just throwing money at something in the hope that you feel better about yourself for doing that, right? That's
Yeah.
not the point, right? So you've got to research the institution, the charity, whatever it is you give it to. You got to really feel in your heart that this is money that's being well spent, going to a cause that you feel passionate about, not just any cause, right?
Yeah.
So what happens? So let me get to this when you get the 10 times back, right? It's instant. There's no delay. As soon as you do that, you get a feeling
Mhm.
inside of you that is 10 times greater than what you gave,
And this is
right?
the importance of doing the research behind it and making sure that it means something to you.
Absolutely, right? But let's finish this thought. When you are doing that without intention, without wanting anything for yourself, it changes you.
Mm.
It changes how you feel about yourself. It changes your esteem. It changes your presence. When you walk in a room, people can see it in you.
Mm.
You haven't told them what you did, but you just know it yourself,
Yeah.
right? It changes your energy. And that energy, everything is energy,
Yep.
is going to magnetically attract people that will want to help you.
Did a conversation with a guy, which my wife talks about it quite regularly, because she's done a lot of research around it. It changes your vibration. It puts you
There you
to a
go.
different vibrational level. It puts you to a different vibrational energy, which then attracts people at that similar frequency, which are normally
Absolutely.
good-hearted people that are already in realms of doing great things, which I know we'll talk about here shortly.
Yeah. And another thing you can do, which also helps with that vibration and giving, is whenever you're talking to somebody, I think you said this to me at the end of our first podcast, is, I've met some pretty famous people, right, who are doing incredibly well. And when I meet them, you know what I ask them?
You know what?
I was asking this. I always say, listen, I know you have a lot of things you're working on right now. How can I help you with your goals and
Yeah.
dreams?
Yeah. I ask, how can I support you now? Like,
Yeah.
in
And
what
I
way
had
can I
a
support
guy,
you?
yeah, and I had a guy who said to me, very, very famous influencer, and he said to me, well, you know Robert Kiyosaki, yeah? I said, yeah. He said, I'd like to meet him. I said, I'll take care of it. Right? It's just, it's amazing. You don't think that other people need help or need things, but they do,
Mm,
right? And if you have the ability to help them with that, because what do most people want from these famous people? They want them to help them,
mm,
right? They're coming up to them because I need this. Can you help me with that? Can you teach me how to do this? That's all that happens. And people are sucking them dry, but nobody is taking the time to think about what they need.
yeah.
Yeah. So that's a powerful one to be an influencer, right? But anyway, so first 10%, and you're absolutely right, man. There's nothing new about this.
No.
This is ancient, right? These are ancient principles. But even though people have heard them 1,000 times, they always fob them up like, oh, that's too simple.
Mm,
That can't make a difference. But it does, right?
yeah.
So you have to do the basics. So what we're
Yeah.
talking about right now is basics, right? Pay yourself first, contribute first, then live off what you have left, right?
Yeah.
But now you know that you are doing two primary things. One is you're becoming wealthier. Number two is you're contributing. And it doesn't matter what it is, right? When you give, listen, people say, when I get wealthy, I'll do it. No, you won't. Because listen to me, when you make when you make $1 million, giving $100,000 is not going to be easy, right?
No.
Start off with a dollar, it's 10 cents, right?
Yeah.
But so what happens is you just become involved with this in that way. It's just second nature. It's just what it is.
Yeah.
And you know you won't miss that $100,000 because you've had this experience over time. You won't start out doing it when you get rich. You will get rich by doing it,
Yeah.
right?
I agree.
And that's what most people say about everything, right? So simple strategies there. Get a financial statement, work on it. Get the book Rich Dad Poor Dad. Tons of incredible investing advice in there too. And the tax advantages of owning real estate. There's a lot of tax advantages, right? Because go ahead. Well, you want to ask me a question? I was going
No,
to
I
finish
was
the
just
point.
gonna say, like, obviously, U.S. versus New Zealand, a little bit different. So, for example, I'll tell you this right now so you have clarity. I know the audience is about mix 50-50 kind of U.S. and New Zealand. So, I do want to kind of talk to that point. In the US, you own your own house and all that. You can write off a lot of your income, your personal, normal day-to-day, job income towards your house, towards like those kinds of expenses. Here in New Zealand, my personal house, I cannot do any like so if I'm normal, PAYE, like my wife, so no business at all, just as PAYE, just does her thing. She invests her over 10% actually. Comes straight out, goes into her Kiwi saver. She also invests some into a normal, again, diversifying into a normal high interest savings account, so that she has, again, cash that's easy to get to, knowing that she's not getting much of a return on it, but she has no way to write off anything else.
Okay. So I wasn't talking about your own personal home.
Yes, I
I'm
figured
talking
as
about,
much, but I just wanted to just again, just for our conversation, the rest of the
yeah.
conversation today, that's how most New Zealanders that are probably listening to this are sitting in that situation where maybe they own their own house or they're like, there is no way I'm even going to be able to buy my own house because I can't save enough to even get a down deposit.
Exactly, man. I think, house prices have gone up here in the US, but I know they're crazy in New Zealand,
Oh,
right?
they are nuts. I mean, they're kind of flattened a little bit, but they're now starting to trend back up again. Like it is,
Everybody,
yeah,
everybody in the world wants to live there, right? So you've got such a massive competition for property, it's going to go up in value.
yeah,
So I'm not saying to buy your own home in New Zealand. I'm not saying to invest in New Zealand. But now we live in a global economy, right?
mm,
So I would say, and I don't want to just specifically talk about real estate investing, but I'm just
no.
saying you can invest in real estate in the United States from New Zealand. There's nothing to stop you
So
doing that.
how do you do that? Because I thought like are you going investing into actual like I mean like straight into a house or is that through like like a funding situation? Like I know like on my stocks I can invest into property, you know, public stock trading where they are mostly investing in just real estate, commercial, you know, and not
Yeah.
commercial.
Okay. Yeah.
How, what,
So,
like, what do we talk? I know that, again, I have so many questions around all of this. I know that I don't,
I'm trying to get them all answered, man. So
I know
in
you're
America,
trying to, I know I'm interrupting and going off on these,
no, no,
like,
no,
I've
it's
got this
okay.
idea, this thought on this spot,
Yeah,
but
you need to get it out. You're just like me, man. Once I think of
yeah,
something, I got to get it
yeah.
out, and it's gonna go.
Yeah, yeah,
God, right?
yeah. And
Okay,
I know you know this stuff so well that I can kind of hit that spot and then we can carry on from where you were.
sure. All right. So there's a number of different ways you can get involved in real estate, right? So in the stock market, you have something called REITs, REITs. It stands for Real Estate Investment Trust, a REIT. And REITs is there are many of them, right? Real estate investment trusts. So what you're buying there is parts of, so that REIT might own 200 apartment complexes, right?
Yes.
So you are going to take a piece of all 200,
Yes.
right? No matter how much you invest, it's a little piece of those 200, right?
And
So that's one.
is this publicly accessible? Like, could I
Yeah.
access it from here in
Yeah.
New Zealand? Okay, sweet.
Yeah. 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 So you can either go directly to the market if you know the name of the REIT, or you can use a broker, but the broker's going to charge you, right? You're going to
Mhm.
realize that to put it in, but you can do it yourself. So REITs is one way. Another way is to use opium, right? OPIUM, other people's inactive, underused money. So there's a lot of money in the United States, right? A lot of money. People make a lot of money doing all kinds of things, right? Whether it's selling drugs or
Yeah.
selling Bitcoin, whatever it is, right? People make a lot of money. I'm not saying get involved with drug dealers. I was just making a joke.
Mhm.
All right. And opium is, this is the good kind of opium, right? Other people's
Mm.
inactive, underused money. So there's a lot of people who have excess capital that don't know what to do with it. They have no understanding or expertise in the investing world. They've just sold a company for $100 million or for 50 million, for 10 million, or even a million. And now they've got capital and they don't know what to do with it. And if they don't, they know that if they don't invest it wisely, they're probably going to lose it, right?
Yeah.
This is what happens to most people because they get a lot of money, they don't know how to handle it, and they end up losing it, right?
Yes.
So again, you've got to be educated. Education's the key here, right? You've got to learn how to identify good investment opportunities. Now, we can't do that on this podcast, right? But I can give people direction. So there's an old saying, and you know, and Warren Buffett, of course, is phenomenal at identifying opportunities, but he uses math. It's not guesswork, right?
No.
And you can buy his book, and he explains everything, how to invest. It's in a book. All you got to do is get the book and follow the system, right? But when he buys a company, he never pays. So this is a good numbers. It all comes down to math, right? He never pays more than 70% of the actual value of the company. And they have to have good management already in place. So this is not a company that's being managed badly. It's just the stock market has not recognized the true value of that company. Warren Buffett does not invest in the stock market. He invests in companies, blue chip companies. Now you got to do the research to know that a company is going to have longevity,
Mm.
right? So, you know, he's invested in companies like Coca-Cola and, you know, all these, companies that he could see is going to have. But when he started investing in them, they were just a United States company. Now they do over 50% of their business throughout the rest of the world, right?
Yeah.
So America is becoming a smaller part of their market. But if you think about it, you go, everybody loves Coca-Cola, right? In every
Yeah.
country, right? So, but I'm saying that he does that research. And then he said he would never invest in top tech. Do you remember him saying that? You
Yeah,
might
I do
not remember.
remember that. I do
And what,
remember hearing it or seeing a snippet on that on tech. So why not tech?
well, he had his reasons, but now what's the which company? Most of his portfolio was in which company?
I don't
Apple.
know. Apple. Oh,
Apple.
okay.
So everybody was surprised when he got into Apple, right? And he, you know what he said? My only wish is I could invest more.
Yeah.
And then when people said, "What do you mean? You've got $100 billion in cash sitting there. You could invest more." And he said, "No, I can't, because my investment portfolio has to be a certain percentage, and we always have to have a certain percentage in cash, and I never go outside those rules."
Mm.
Right? So it doesn't matter how good the opportunity is, he doesn't break his own foundational rules.
So so I know he's talked about the blue chip companies, and the individual companies. But then I've seen him talk about, if you're going to start one place, then just start with your index funds.
Yeah. And the Fortune 500 is an index fund.
Yes, exactly. So again, I guess it's just, are we diversifying here? So we're doing blue
I'm
chips as
just saying
well
the
as
difference.
S&Ps, or
What I'm talking about here is investment strategies. So it doesn't matter if you, when you go into the stock market, let's say you start buying stocks,
Hmm.
you're going to use the same principles. The principles never change, right? So you never want to pay more than 70% when you buy a stock of its current market value. So you're going to use price to earnings, and there's ratios that you can use to tell you what if you add basically if you take the stock price and you add the number and you times it by the number of shares, that tells you how much the company is valued at, right?
Yeah,
And then you can look at its true value to determine what it's actually worth. And if it's worth more than 70%, move on. Now, it's not necessarily easy to find a well-run company you can buy at 70% of value, which is why he's not buying all the time.
mm,
Times his buys, right? So you don't have to be buying every day. In fact, if you're buying every day, you're probably going to lose a lot of your money because you're
yeah,
speculating, right? You're speculating, right? So we want to take the risk out of our investments as much as we possibly can. Now, there's still risk. So, for example, I buy Bitcoin, right?
yeah,
Now, look at the price of Bitcoin, right? It's gone down to about 25% of what it was not that long ago, right? It was up to about
yeah.
$130,
I sad I
130,000.
sadly put first investment into Bitcoin. I put about 300 US into it at that peak, and now I've watched it drop. I'm like, it'll come back up at some point.
It's gonna come back up, right? Because I've
Yeah,
done my homework. It's
yeah,
going to come back
yeah.
up, guaranteed, right?
Yeah.
Now,
It's not, you look at the trend, you just look at the trend and you're like, oh, okay, yep, it always has these dips and it always comes back up. Like it's not one of those things that is going to just completely plummet and completely disappear. I have invested in those companies and
yeah.
lost not a lot of money, luckily.
So you've got to do your research on it. So if you listen to Michael Saylor, I know you know who he is, right?
Yep.
And he talks about orange pill. You got to be orange pilled. That means you've got to study Bitcoin for at least 100 hours, right? And when you've understood it at that level and you put that 100 hours of time into understanding it, you know it's going to come back up. And there's all kinds of knowledge, information, statistics, and realities that have happened to show that. So Bitcoin has been hit from every single side you can imagine that would normally have destroyed it if it wasn't real. But it's
Mm.
come through all of it, right? Now, the beauty of Bitcoin is it's still in its embryo stages. That means it's going to have volatility. But
Yeah.
volatility is the good thing.
Yeah.
That's the greatest thing about it. Once it's hit a million, 2 million, 3 million, and it's kind of leveled out, the opportunity is gone. It's gone. The only way there's an opportunity is if it has that volatility. So
Yeah.
enjoy it, right?
Yeah.
And when it does come down as it has, guess what? Just that's the time to buy more, right?
Mm.
Because you're going to be able to dollar cost average, right? And so the $300 when you paid it, bought it at the top is going to be worth a lot more. The secret is this though. There's a lot of people that have got into Bitcoin that are buying it on speculation and they buy and sell it. And you can make good money buying and selling it, no
Yeah.
question, right? I've done it, right? It's a little stressful, right? But here's the thing. You notice because of the volatility, it's going to go up and it's going to come down. So you buy it at the high and you buy it and you sell it at the low. Not quite at the very low, not quite at the very top, but somewhere in between, right?
Sorry, you mean you buy at the low and you sell at the high?
Yes,
Yeah, you
right.
said the
Yes.
you said the opposite.
Did
So
I say the opposite? You knew what I meant. Yeah. Please don't use
I
that
just was I
strategy.
was, I was gonna
That
say
strategy, that
people
strategy is not working right
please
now.
do not sell at the high and buy at the low. Buy at the low and sell at the high.
Yeah, buy at the low, sell at the high. Yes, exactly. If you've got that wrong, call me. All right. So yes, but not at the very height and not at the very bottom,
Hmm,
right? You never try and time it, right?
no,
Now, by the way, I don't do this anymore and I don't recommend it, right?
no.
Because
My mom did day trading for a little while right before we left the United States, back just before the drop in 2000, and she was like, you just I was like 12, and I still remember her being like stressed out about it all the time. It is, yeah, I unless you want to do that as a business, like as your career and your profession, I would not
no, no,
recommend
even
it.
so I used to teach that, right? I used to teach momentum trading, right? And you can make money out of it, but it's very dangerous and you're probably going to lose most of it. Here's the deal though. Any investment, what did I say? You can never put all your money into
No.
it. What's the worst? If you losing that money means it's going to put you in a bad situation, you can't make that investment, right? So you only put money into Bitcoin that you can afford to lose,
Yeah.
right? Um,
Same as any
so
stock. Same as anything. You know, I mean, anything you just put you.
that's my perception, right? And I've done both, right? So what you want to do, and then they call this in Bitcoin, you've heard of it, you got to hodl, right?
Yeah.
You got to hold on for dear life no matter what happens. You do not take that money out because you don't need it,
Yeah,
right?
but
And
I
you,
mean, and
you
this is the thing. So going back to circling back to that $65,000 a year, avatar, guys, I'm the same situation. I don't earn mega money. I have no money coming really. I have a small amount of money coming in for my business, but it is not money that is I'm taking, and I am literally as soon as I get paid, I take my KiwiSaver, my automatic comes out, and then I take a further 10% and I invest it myself on stocks that I've looked at and I've thought about. I want to go back, Stephen, real quick to that avatar who's taking that 10%. Maybe it's automatically going to their KiwiSaver, their IRA, their 401k, whatever it is. Are you saying that, say they're putting 10% into that, are you saying they should take a further amount and put it into something different? Or is that, let's say, quote unquote, good enough to just do the 401k?
Well, you got to ask yourself, where is that going to get me in the long run, right?
Yeah.
Is that ever going to get me to retirement? Is that ever going to get me to the place I want to be? You've got to ask yourself that question. You've also got to look at, which you mentioned at the beginning, everyone has a different risk tolerance, right? So there are some people going, stocks, what are you crazy? I would never do any of that, right? I know I'm happy just to get what I'm getting. Fine, that's okay. If you're happy, just keep doing what you're doing.
Yeah.
But if you want more, you've got to look at ways to be more creative, right?
So
And
say
that
I
means,
only have that 10% and it's $200
Mhm,
every fortnight. So every 2 weeks, I've got $200 that
mhm,
I can invest.
mhm. Okay, so yeah, you can invest in Bitcoin with $200.
Yeah, exactly. I do it.
You want? Oh
Mine,
yeah,
mine's
so so
mine's more or less it's somewhere around that 200 on top of my KiwiSaver side of things and everything
you,
that I
you,
take and I
you,
put to the side. So if I'm taking around that 200-ish, I'm using a fake number, just FYI people. But say I'm taking that 200, I then take it. I actually do it into like I look at my stocks, I look at it in index funds, I look at some of my specific, I've got Tesla, I've got Visa. I think no, I got rid of Visa. I've got Costco. I've got different things that I kind of look at that I know are companies that are not going to, unless something terribly wrong happens, they are not going to go bankrupt and I'm not going to lose all of my money that I put in there. But again, all that money that I'm putting in there, I am putting in there going, I really hope that it all gets really good. And I
Mhm,
do my research on it so that the chances are higher. But at the same time, it's money that if it plummets because we go into World War III and the stock
mhm,
market absolutely collides,
mhm.
I know that I'm still not going to sell because that money is there for 40 years from now, 30 years
Yeah.
from now.
So is your question, even with that amount of money, how do you invest? Is that the
Well,
question?
how do you invest, but how do you also like I look at it still to this day, and I know that again, the knowledge that I've learned, I know there's a hockey stick trend. It'll get to a certain point and then it starts to really kind of grow. But when you're looking at like when I first started, even at the stage that I'm at now, I'm 40 and I'm like, okay, cool, retirement. If I wanted to like look at retirement and like not again, I know this is why we're having this conversation, so you can not feel like you're working as soon as possible, but you're still investing, you still have that flexibility, that freedom, your leverage. But how does that person or even myself go, okay, cool. This looks like it's never ending and it's never actually going to get me to that stage with my $200 that I'm putting in every 2 weeks.
Mhm. Well, that's just a story you're telling yourself,
Yeah,
right?
okay.
Because it will compound. And
Yeah.
you understand the power of compounding,
Again, that
right?
hockey stick that I talked about, it'll get to a stage where it just starts to
And
explode.
just going to go, it will, yeah. As long as you're not taking any money out and you reinvest your profits, now you've got compounding, which is the eighth wonder of the world, right?
Yeah.
So what you want to do is you want to understand that
Yeah.
so that you can see that you will get there, even though it's only a small amount of money. And I mean, you've seen the analogy when someone says, let's play golf. We'll play for a penny a hole.
Mm.
And you look, when you get to the 18th hole, it's like, holy shit, that's
Yeah.
a boat ton of money, right? I didn't realize because they didn't understand the power of compounding, right?
Yeah.
So again, education, study the
So I
power
guess
of
I mean I know this. I'm going to bring it up. Obviously, earlier you start the better.
yeah.
So I say this to family members that have kids. I'm like, start something as soon as they're born. Like as soon as they're born, put $10 a pay into an account, and like even if it's just KiwiSaver, put it in there because it will just keep going. And by the time they're 18, like literally they probably don't have to put anything else in again. And by the time they're 60, they will have like exponential amounts of money. Almost 40. Let's take me as an avatar. And I'm trying to, again, these are those kind of questions that when I'm watching things, I'm like, yeah, buts.
All right,
And so I want to
so
kind of get,
just to hit on that,
yeah,
hit on that for a second, right? Because that's important, man. Uh, you got to stop doing that.
yeah.
You got to start asking. But if it doesn't work out, you got to say, but what if I don't do it?
And that's where I'm like, okay, cool. If I don't do it, put in the little bit that I can. But obviously on podcasts when you're watching, you can't ask questions. You can't be like, okay, cool, I get that, but how do I make sure that I'm in the right places? How do I make
Yeah,
sure,
yeah,
again,
sure.
like you
Yeah,
said, research. You can't ask these how, like, or these but questions. But okay, if I'm only putting in $200 because on the podcast it always sounds like they're putting in thousands and getting
yeah.
these massive returns.
Yeah.
Is it
So I'm
worth
talking, I'm
is it worth
talking,
it to me?
when I say it to you, because you've used yourself as an avatar, right?
Yeah,
So when I am saying it to you, I'm saying it to everybody out there that has the yeah,
exactly.
but you've got to get control of your mind, right? You've got to, because if you don't, it will destroy you, right? It will
Mm,
destroy you investing. It will, because there's always a reason not to do it. And we tend to gravitate towards that because it means not facing our fear, right? The worst risk you can ever take is not taking any risk at all.
true.
Right? So you have to take a little bit of risk. There's no certainty, which is why we diversify, right? So if you've got $200 every 2 weeks or every month or whatever it is, you still diversify that investment. You're not going to put it all into Bitcoin. You're not going to put half it in Bitcoin and half in Ethereum either. You're going to do something else, right?
Yeah,
You're going to diversify in the categories and investments that there are, right?
yeah,
And as an investor, you want to have three buckets. We call it the three buckets, right? The first one, absolute security. Very, very little risk at all, right? Second, a little bit more risk. And the third risk is your risky bucket, right?
yeah.
That you can take that risk, and if you lose that money, who cares, right? So that is that's called the three bucket plan, right? And that's out there too. I think Robert Kiyosaki has that in his book, Rich Dad Poor Dad, as well. So all these principles are principles to create wealth, right? And they've been proven over centuries, right? Centuries, not decades, centuries. So you've heard the phrase, it all comes down to numbers, it all comes down to math, right? I mean, literally everything in the universe comes down to math.
Yeah.
Where your nose is on your face is the golden ratio, the golden mean, right? Everything is mathematics. Now you're getting into sacred geometry, but geometry is math, right?
Hmm.
Architecture is math. How much weight can you put on all that stuff, right? It's everything is mathematics. Have you ever seen that movie, A Beautiful Mind?
Yes.
Right. So that's the point. And he started to see everything as math, right? And he went crazy. So it is literally all numbers. So when we're investing, we're going to use math, right? Not guess, right? Not just, well, what we can use our intuition, we can use facts, and we can use what we see. What do I mean by that? Well, you know, if your kids are crazy about a particular product, because they do, they get crazy, what's going to happen to the value of that company stock? It's
It's
going to
gonna
go
go
up
up. Yeah.
because man pushes it, right? So then you got to decide, well, is it a fad that's going to last 3 months or is it going to last a while? And you got to look at that, right? You got to figure that out. So like Xbox and things like that, they're not going to go to the trouble of investing billions of dollars in the Xbox if they think it's going to last 3 months, right?
Yeah.
So they've done that research for you, right? They've already told you, we know this is going to be something that's going to last. We're probably going to bring improvements on it, but the company is going forward, right? We wouldn't be investing tens of billions of dollars into a product if they hadn't done their research. Does that make sense?
Yes.
So that saves you having to do yours, right? So look around you. Well, you mentioned that you invest in Costco. What do you know about Costco? You can't get in there, right?
No.
And people walking out have got baskets of trolleys like this big, right? The
Yep.
average cart that they take out of there is now over $700.
Wow, I did not know that, but I can, yeah.
That's
I
the
believe it.
average.
Yeah, I believe
That's
it.
the average, right?
I can't go
Because
in there and not walk back out without spending, at least $100 to $200. Like, and
you
it's
know what I
not that I'm
mean, right?
buying a bunch of crap. It's just like I see stuff and I'm like, oh yeah, I need that. And
Yeah,
like, yeah, cool. Like, and yeah, no, and that's why I looked at cost. I looked at things that like I'm like, cool, I buy these. I look around, everybody buys them. I think I still at one stage I bought Lululemon
yeah,
because I look
yeah,
around and everybody has Lululemon. I'm wearing Lululemon shorts right now.
yeah, yeah,
Like
yeah.
it's a company that you see is going is continuously trending.
Well, it was,
It was.
right?
It's now not doing so great.
Yeah. But the reason is, and this is why you got to keep your eye out, is because they had no moat around their business.
Yeah.
Do you know what a moat is?
Yeah, I know what a moat is. Yeah, the water
Right.
around
Yeah.
a
So they had
yeah.
no moat. So everybody came in and started
Yeah.
selling the exact same product without
They
their
copied
logo
them.
on it. They copied them, right? And created a
They
brand
they
around it.
copied them. They copied them, and they didn't. But again, this is where you evolve or you die, and this is why we're having this conversation because you look around us and the gap between the middle class and the rich class is growing, and how do we bring that for you, the audience closer together.
Absolutely. So it's not like, and that's another thing, right? It's not like you can go to the gym once and you've worked out, you never have to work out again,
No,
right? So you can't just say, and you're doing it, you're changing your portfolio depending on what happens, right? And that's what you have to do. So, you just talked about Lululemon, but then you've got to look around and say, because you notice it, right? If you go in the mall, you go online, you start to see these other companies. They go, wow, that looks a lot like Lululemon, right?
yeah,
So now they've got copy. The people
yeah,
are copying them, right? So maybe I need to get out of that because there's no way to stop that. They can't stop that happening. There
yeah,
are products that have a moat around them, like Apple, like Google, right? So there might be other companies that come out and try, but the only way that's going to happen is if they don't keep up with what's going on
mm,
and learn how to adapt those things, like AI, right?
yep,
So Google could have said, "No, we're Google. We don't have to worry about AI." What do? No, we're going to get in there
yeah.
and we're going to invest billions of dollars in AI. They come up with Gemini and all kinds of different AI bots, right? So you're never at the top of the mountain.
Yeah. All
Never at the
right.
top of the mountain.
So, Stephen, I know we've talked about leveraging things, buying assets, becoming the bank. We've talked about, making sure that 10%, we spent a lot of time on the 10%, the 10% that you invest pre-tax, and then the 10% to contribute to a cause that you believe in because it changes your vibrational and your how you just hold yourself in that because contribution is everything. We're a society that needs contribution. And I'll say this so much. I'm going to beat on for a second on this because contribution is something that I feel like society has lost the plot on running away from, and we're all like there's so many people out there that you see, depending on where you're watching, there's no huge contribution happening there. So we do need more contribution. You can never have enough contribution. So there's the 10% contribution. We've talked about kind of where to look at, how to look at things, which companies to look at, the 70% rule, talked about Warren Buffett. Before I jump back to, because I'm interested in that, how do you become the bank section? Because I don't understand it. I don't understand how you do that when obviously, yeah. Anyways, I'll ask you some questions around that. Is there anything else that we need to, that you feel like the stage we're at, or the stage of the audience that we're possibly the avatar that we're talking to? Because we're not talking to the person who's already really knows all of this stuff, or maybe they do know it, but they aren't implementing it. We're talking to the person who's at 65,000, they want to get into it. Maybe they've just started. How do we enhance them? Is there anything else that we need to talk about before we go back to how do I become the bank? And I'm not talking about becoming the actual bank. I'm talking about using and leveraging things so that we can actually, again, you've talked about that investment, using those to then so that you're not actually in your day job.
All right. It's interesting how you asked me 20 questions at the same time, but
I know.
I'll try and
The main question here, Steve, I'm glad you called me
and
on that. The main question I have here is there anything we need to talk about before we jump back and ask questions on other things?
yes. So first of all, just going back to mindset, right? That is so crucial. I want to spend another minute on that, right?
Yeah.
It's easy to believe, when you're making the amount of money you do and you're struggling to pay your bills and yeah, you make it sound easy, but I don't have that extra 10%. You got to change that belief. You just do. Right? It's a belief. It's a story, right? You will find a way. Listen, if you're making 50 grand a year, it'd be the same thing.
Yeah.
If you're making 100 grand a year, it'd be the same thing, right?
I can
So,
tell you, and sorry, Steve, I'm going to interrupt here because I'm going to say I was that person.
yeah.
I remember I was at Date with Destiny, Tony Robbins' Date with Destiny, and he
Uh-huh.
mentioned a little bit on that. And I was like,
Yeah.
okay, cool, yeah, sweet. It was more like he talks, I think on that, he talked more around contribution and that. But I bought his Business Mastery, which is a massive investment
Yeah.
because I had to fly back halfway across the world to
Yeah.
attend that on top of the initial investment into it.
Yeah.
I went to that seminar and I went, okay, cool. I at the time felt like I'm the dumbest person in this room, which was great because I'm the dumbest person in this room, which means I can learn a hell of a lot.
You
But
learn
I
a
also
lot. Yeah.
felt
Right.
like I need my business further along to be able to go to that. But I learned so much stuff like the 10%. I remember him having a speaker and he talked to it as well. Take 10%. If you're already doing 10%, he was like, everybody in this room, if you're already doing 10%, do 15%. If you're already doing 15%, do 20%. He's like, right
Yeah.
now, implement it, start it, and do it. And he's like, have it, if you can, have it come out of your bank account before you even see the money come into your bank
See the
account.
money.
So
Yeah.
you don't have, because he's like, again, he said the same exact thing as you. Once it's gone, you won't actually use it. So if you're
Yeah.
earning 65,000 now and you get a pay rise to 70,000, that extra 5K, yes, you will spend it,
Yeah.
but you didn't need it before
No.
that pay increase. I mean, you might have felt like you needed it, but you were living without it. And so it's that
Yeah.
increase. And so I started that day, I started to implement everything, every money that came into my bank account, because I was running my own business at the time. Any money that came into my bank account, 10% instantly. And I actually changed the way that I got paid. So from Stripe,
Yeah.
I would have it every week. I would have it all come in at one time so that I knew exactly every week this is what came in. I would then take 10% of that and I'd instantly invest it. I'd take another 10% and I would instantly, you know, give give it to contribute it to some cause that I cared about.
Yeah.
Now my pay comes in every 2 weeks, and I instantly my KiwiSaver goes out of it. I instantly take 10% and I transfer it over to my account to be able to then invest into stocks. Not
Yeah.
even
That's the
think about it.
system.
There's
Yeah.
no negotiables on it. It is money that
Right.
is gone instantly, so that I can't then accidentally spend it.
So you're living proof.
Yeah. And
What
that's
I'm
why I
saying
wanted to tell that
that
story is like
you've
I
changed your
changed that
belief.
mindset of
Yes.
this money. And there has been times where I'm like, I do not have the money. Like have bills that have come up. I figure out how to
Mhm.
pay those bills without using that money.
Yeah. I mean, how many people, once they've been paid at the end of the month and they see all that money go away, feel terrible, right? They're like, oh my God, I'm never going to get where I want to go.
Hmm.
As opposed to maybe at the end of every month, you look at your investments and go, oh my God, man, I'm getting somewhere.
When I
Even
feel
if,
bad about my money, I look at my investments and I don't even look at the number that is in there because I'm like, the number is irrelevant because I'm saving this for retirement. I'm not saving this to use next week. I'm saving it for 20, 30 years from now. I look at the percentage that it's gone up.
yeah,
That overall, my whole portfolio in that, wherever I'm looking, I look at the percentage that has gone up, the 7% that we talked about earlier. I go, I'm up 7%. Yes.
all right,
And that,
we've
yeah,
got to raise our standards, right?
yeah.
7% is not going
7%
to
is
work.
not like, again, that's one of my portfolios.
Yeah, yeah, yeah,
My
yeah.
other one is up 53%.
There you go. There we go. That's exciting, right? That's exciting, right? And most people can't believe that you can make 53%
Yeah. And
because that's their
I started
mindset.
investing.
If I get 3 or
Yeah.
4 or 5%, I'm doing really well. That's because you've been conditioned to believe that.
And I've done the research. I've looked at it. I've looked for the patterns. I've looked at, when I go and look at a stock, I will look at the top people that are investing. What are they recommending to invest in? Then I go look and I research that stock. I look at the trends. I look at the path that that company has been on over the last 5, 10 years. I look at their graph and I go, okay, cool. Like this is, and I'm pretty good at picking out patterns, which is great. If you're not, you can learn it, like we've talked about. But it is, you look at that and then you go, okay, cool. I'm buying here. I'm not worrying about if it drops tomorrow, which sometimes they do.
Mhm.
It will come back up because if you look at the patterns of what they've done and where they're going to, then it
Mhm.
does. And I just wanted to say that for everybody. I'm living proof of this that it can work from somebody who is literally on a salary.
Yeah. So one of the things, like we said, doing research, and most people hate it when you say you got to do research.
You don't
Where
have
do I
to.
go? Where do I do
You
my
don't have to
research?
do a ton of research. Let's get honest. I've made 53% return without doing a ton of research. And I know,
But but
yeah,
you can do a ton of research in a matter of seconds, right?
exactly.
Just put it into AI and it will come back with pages and pages and pages of information about any company, what's
Mm,
going in the market. So for example, so Bitcoin goes down
mm,
and you just type in, why is Bitcoin going down?
mm-hmm.
And it will come up with all the things that are happening. One of the primary things that has affected Bitcoin in the last few months is liquidity. So
Mm,
when the markets don't have a lot of liquidity, Bitcoin tends to go down. But here's what happens when Bitcoin goes down. There's a lot of people trying to get wealthy just out of buying and selling Bitcoin, and they're buying it with borrowed money, right?
yeah.
They're buying it on margin, right? So what happens is if it goes down by a certain amount, they get a margin call, which means they have to sell. And when you have to sell, what's going to happen to the price?
It's going to go down more.
Going to go down, right? So, and then what happens? What does Bill next door say? I got to
Oh my
sell
God.
mine.
I got to sell mine because I see it
I got
going
to
down
sell mine.
instead
And
of
so
living for the long term.
we start seeing a spiral, right? It spirals down. And then what happens is the savvy investors will start coming back in, but they're going to wait and see how far down it goes
Yeah.
first, right? How many people are still in panic
But
mode?
but let's get clear, people. The savvy investors do not sell what they've already invested into it. They keep it and wait for it to drop down and go, cool, Bitcoin's on sale.
That's right. And you call that huddling, right? Hold on for dear life. You
Yeah.
got to huddle, right?
Yeah.
You've got to have, and that goes back to what you said. If you've done the research and you know the value of the company, you're not going to panic.
No.
You're not going to panic because the value is still there,
Well, it's like
right?
Tesla. Tesla is very volatile, and there's times where it just drops, but then it always comes back up. You look at its graph, and it's over average. You don't look at the just weekly. Look at the over the last year. Look at over the last 2 years. On average, it's gone up. Yes, there's been lots of ups and downs and all over the place. I mean, I'm surprised it doesn't go around in circles sometimes in there. But but it's that it overall averagely goes up, and that's what you're most concerned about is that and is it a foundational company? Then let's talk about index real quick. The importance
Right.
of
Well, let's just
having
go
the
back. Let's
diversified
go back to
index. Okay, go back.
Tesla. It's a good example, right? So what is Tesla as a company? What is it? What does it do?
I mean, their primary is electric vehicles, but there's so much more to it.
No, they're a computer company, right?
Not true.
So
Yeah.
everything is a computer, right? Everything. That car is not a car, it's a computer, right? Everything is a computer. What is the future of robotics?
Computers.
Who is the number one manufacturer of robots? Tesla.
Tesla. Yeah.
Yeah. Right? How many people are going to how many people are going to have a robot?
Sadly, probably everyone.
Everyone is going to have a robot. Who's not going to want to have a robot, right? Who's not going to want to have a robot that'll clean the house, do the dishes, take care of the house, do the washing?
Yeah.
It's going to happen. Now, think about this. What about companies that employ people?
Yeah. They're gonna
They're
want
going to
more
be
robots.
We're going to be exactly. So we're going to have billions of robots.
Yeah.
Now, there are going to be competitors. They're not going to be the only ones that build robots, but they're certainly leading the pack.
Mm.
And they're certainly going to have a huge advantage, right? And they've got all the technology, all the engineering now because they've been using it in the cars. Every time you get in that car, that computer is sending information back to Tesla on every single thing you're doing, the roads that you used,
Yeah.
everything. It's got all that information. Nobody has even anywhere close to the data they have, right? So
Well, it's the same as
that's
these iPhones. The iPhones do the same exact thing on different data.
there you go. And they've got the best AI, right? So
Mm.
I mean, what's going to happen? Do you think Tesla's going bankrupt anytime soon?
No.
I mean, they basically promised Elon Musk $1 trillion in a few years. What does that tell you? They know it's going to explode, man. We haven't even seen anything like the growth that they're going to go through. So I don't know, man. It sounds like a pretty good investment to me
Yeah.
right now. Like you said, it might go down. There's all kinds of things that affect these stocks, but we have to understand that stocks, the value of the market, is not anything to do with logic and reason.
No.
It's emotion. It's
Yeah.
run emotionally. People's emotions change, their decisions change. So you've got to stay analytical. You've got to stay focused on the facts,
Yeah. On
on
the
the
math.
data, on the math. That's it.
I mean, it's the same as we'll use an example before. I do want to talk about, and I know for time wise, we've been talking for a little bit here. And if we look at, where was I going with that? If we look at the GFC, global financial crisis that happened in 2008. And
Mhm.
the reason I just want to use this as another example of hold on for dear life.
Yep.
Because
Yeah.
there will be another big crash, and I don't know. I mean, from what I'm reading in that, it's anticipated in the next couple of years there's going to be a big crash. That does not mean sell. That means hold on for dear life, buy when you can, because guess what? Your average is going to go up and it will come back up. We've
Well, I
looked
mean,
at it over all the years. GFC
do you know,
did it,
do you know
80s
who
did
Andrew?
it.
Yeah, yeah. Do you know who Andrew Sorkin is?
No.
All right. So he's just written a book. It's called 1929. And you know what happened in 1929,
Yep.
right?
The Great Depression.
Right. So he is showing that every single indicator that happened in 1929 is prevalent right now.
Yeah.
So we are going to have another crash. Now, he's not stupid enough to say it's going to happen next month
No.
or in the next couple of weeks, but he's saying that and he said, it could just be something so innocuous that happens that just tips it over, right?
Yeah.
And then we're going to go into a spiral. So you don't know exactly when it's going to happen, but be prepared. And like I said, don't put any money in that you can't afford to lose or seemingly lose in value so you can hold it until it comes back up. Because it will come back up,
Yeah.
right? Because when that happens, what's going to drive the drop? What's going to drive the crash?
More people,
Logic.
for the fear, and everybody
Fear.
selling.
It's
The fear
all
and
going to be
everybody
fear.
selling.
You remember the last crash we had, and Warren Buffett put a full page ad in the newspaper, and he said, when people are afraid, buy.
Yeah.
When people are confident, sell, right? It's that simple. And he said, buy these stocks now because they're going to go back up. And he was right.
Yeah. Yeah, exactly. Exactly. Okay, let's go back. I want to go back into that how we leverage. So you said, invest, you said real estate, you said, art, buy assets and then leverage money against those. This is where I am completely a novice when it comes to this because in my mind, again, I know this is a mindset thing. My mind goes, cool, I buy art, I buy stocks. My stocks, let's take for example, my Kiwi Saver has gone up 7% in the last 3 years on average. I've seen it as high as 15, but obviously it's an aggressive, so it jumps up and down. But right now it's 7%. The bank is going to charge me interest at 6% to do it if they're willing to go, yes, that's a good investment for us. We will give you money and we know that we will do that. Am I on the wrong realm here and thinking the wrong way when it comes to this, or is this truth? Because I'm like, okay, the bank, I'm gonna have to pay 6% interest on this money or there's 6% interest on this money, whether I'm paying it or I don't. Again, I am a novice when it comes to this, and this is where I see people say exactly what you did. Use the banks to your benefit so you don't pay taxes, all these different things. I know then there's the percentages of taxes. I don't understand any of it, so I want to know.
Okay. All right. So
And I know this could take us a while, so hold on, people.
buckle in. Buckle in. All
Yeah,
right. So, first of all, let's clarify some things. And this is the danger of doing a relatively short podcast and
podcast
trying to
on it
cover a lot of things because um, things can be taken
out of
uh,
context.
out of context, right? So let me give you an example, right? So I mentioned art, but I'm not suggesting anybody who's making $65,000 a year should start buying art.
Yeah,
That's when you've already, you're a multi-millionaire, right?
yeah.
Because I'm not
You
saying you
can
could go down.
diversify on things and take more risks when you're a
Well, what's
multimillionaire.
your local department store? What's a department store in New Zealand?
I
What's
mean,
the
we've
name?
got Costco, the warehouse, which is like our version of Walmart.
All right. Well, I'm not saying go down to Costco and start buying some of the art that Costco is selling, right? Because that's not going to get you anywhere, right? That's not the art I'm talking about, right? So I just want to be careful and make sure, because people are going to go, I'm going to go down and going to buy. No, that's not going to work, right? So one of the keys to buying assets are that they are scarce, right? Scarcity. One of the things that makes Bitcoin valuable is there's only 21 million ever going to be made, right? And so that creates scarcity. And I was listening to an interview yesterday. I was watching an interview as a podcast with, I'm trying to think of his name. It's either Schweiss or Schmidt. Anyway, and he was saying, Bitcoin is a scam. He's still saying that, right? Bitcoin is a
So many
scam.
people that still say it.
I know it's crazy, but that's good, right? Because that's showing you there's
Create
still
scarcity.
volatility, right?
Yeah.
Absolutely, right? And he said, you've got something, there's no value to it. You get it from a bunch of numbers. How stupid is that? And nobody said this, but I'm thinking, wait a second. You're saying invest in the dollar, which is worthless. It has no value.
Oh,
It
I think
just printed.
it's worth it's like the penny. The penny it costs more to make than it does actually have any
But it,
value.
but it, but in fact, it has no real value because they
No.
just print it. Where
It's,
did
it's a piece of
they
paper.
just print it? And in other words, at least there's proof of work in Bitcoin that you generate this Bitcoin. You don't have to do anything to print to get a dollar. It just prints, right? And what's the what how many dollars can they print?
Unlimited.
Exactly. So there's no value to it. And eventually we're going to print it out of usage, right? It's going to be worthless. Eventually that's going to happen. So what is going to hold value is an investment like Bitcoin. And he says, well, you can't even use it now. I'm like, wake the fuck up, man. Are you
You
kidding?
can use
You
it
can
so many
use it all over
places
the world.
now. Yeah.
You can use it everywhere. We're starting to take Bitcoin, right? So it's a question of time, right? It's a question of time. But the beauty is, if you own it now and you buy some more now at this price, you're going to have something of way more value than investing in the dollar, right? And
I have
way,
a friend who bought it back when it was like the new thing. Like you look on the graph
yeah,
and it's
yeah,
down
yeah,
that flat very bottom. I think he bought
yeah,
$1,000 of it, and it is literally even with the things that is at, it is yeah, it's insane. And so
yeah.
yeah,
So people are programmed still, even some of the biggest investors in the world. Charlie Munger even said it was a scam. He said it's a rat or whatever. And Warren Buffett has said that, but he's backed off, right?
mm,
Jamie Dimon, right? Jamie Dimon, whatever you want to call him. The head of Chase, JP Morgan, said it was a scam. And now they sell it, right? Now you
yeah,
can buy Bitcoin in ETFs from JP Morgan, right? So people's minds are going to change, but like everything, it takes time for
yeah,
people's minds to change and accept the change. The sooner you can see it, realize the truth about it without being impressed or by being led by other people, you will make the money. And one of the all great investors say, look, by the time everybody knows about it, it's too late.
yeah.
So you're going to have to invest in things sometimes that everybody is going to naysay it. They're going to say, oh, that's stupid. But we're talking about new paradigms. So this is something people should know. New paradigms go through three distinct phases, right? First, they are vehemently opposed. So Bitcoin was vehemently opposed, but it made it through, right? It survived it easily. The next thing, it's ridiculed. Oh, yeah, what are you going to do? You're going to buy some Bitcoin today and be a millionaire by Tuesday? Ridiculed.
Mm.
And the third phase of any paradigm, well, everybody knew Bitcoin was going to do well. I mean, it was obvious from the beginning, right? That's what happens, right? And it'd be the same thing if you went through that phases of building wealth. First of all, oh, here comes Chris. Yeah, thinks he's going to be a millionaire. Come on, Chris. You know, so they're gonna rebel against it or then make fun of you. And the third thing, then they'll say in the end, oh well, everybody knew Chris was going to do well. It was obvious because he's a bright guy. You could have bet on that, right?
It's that
You're
overnight
going to win. There
success.
you go.
You get to
There
that
you go.
overnight success stage.
Yeah, Chris was always lucky.
Yeah. There is no such
So
thing as
that's the
luck.
basis, right? So the other thing I wanted just to touch on, because we're using some language that some people may not be familiar with,
Mm.
the word leverage, right? So leverage is the primary principle in creating wealth, right? So Archimedes once said, "Give me a place to stand and I will move the earth." In other words, give me a big enough lever and I can
Mm,
move the earth. It is the primary principle in the creation of wealth. It's also one of the most powerful forces in nature.
yes.
So all we're doing is we're harnessing nature, right? So what is leverage? Well, you've all heard of, using other people's money.
Hmm.
Leverage, getting other people to work and put their time into your dreams.
Well,
Leverage,
that's what all big companies are.
all of them, right? So you think about, well, let's say we're going to kind of get antiquated a little bit here, but a simple analogy would be, so somebody owns a factory, they employ 5,000 workers, right? Could the owner of that factory do the work of 5,000 employees?
No.
No, it's not possible.
I
The
mean, think about
only
how many
way,
hours it is. 5,000 times, let's just say 40 hours. I mean, I don't, my math isn't that good, but that's a lot of
that's a
hours, and
lot,
you do not have that many hours in a day.
right? So the only
Boy.
way you can build the factory and make the factory productive is if you leverage other people's time, other people's energy, and other people's knowledge. It's the only conceivable way. But the people who work in the factory went to schools that did not teach them that.
Hmm.
Taught them to go get a job, work hard, save for the long term, and you'll get a retirement or something, right? So it's all what we're taught and how we're educated. And
Question on
that
that
was not,
one. Do you
well, just
believe?
let me say
Yeah,
one more thing.
Sorry, go ahead.
And that's
Sorry.
it was never an accident,
No.
Chris. It was on purpose, right? It was the conspiracy of the rich. They needed the masses to send their children to school that were going to prepare them to work for them in their factories. That was the whole thing, right? So now, because other kids go to different schools, they learn different things and they can create wealth and they create generational wealth. And there's no reason why we can't do that now with the technology that's available to us. However, they don't want you to do that. They want to create division in our world. They want people to hate each other because of their religion or because of their political beliefs. And it goes on and on and on. They want to keep them apart because that's how they can be controlled.
Do you think in today's society we still need though those people to work in the factories and the foundries and that to keep society going, or is it a shift that we need to? I know we've got robots and all that stuff coming in the things like not too distant future that can do a lot of those factory working roles at an even cheaper cost. But for right now, are we thinking we need to prepare ourselves for that time? Or I guess my thing is, do we need me and the company that I work in? Or should I be figuring out how do I get out of that company so that I can?
You should be thinking how to get out of that as soon as you possibly can, because
Why?
all those jobs are going away, man. Every one of them. I don't care what it is, it's going away. Think of this. You have supermarkets there, right?
Yeah.
And you can either check out with a cashier
Or use
or you
this.
can check out self-checkout, right? And what you've noticed is those self-checkouts have got more and more
Mm,
and fewer cashiers, correct?
yes.
So those cashiers are looking at that self-checkout every day. What would you tell them to do? Well, hang in there. You probably got another 2 years or 5 years or 10 years, and they don't.
So if we're
Job
leveraging
after
if we're
job.
leveraging time and we're figuring out this leverage side of things so that then we can become the bank as you said earlier on.
Now, just to hit on that point as well, I'm not saying put a sign over your front door that says Bill and Mary's new bank.
No, and that's and yes, sorry. I'm saying the same thing. Like we're using it as a metaphor. We're using it as a metaphor because you're leveraging that money so that you're actually using it to your benefit instead of just consistently. Like I look at my mortgage, I'm like, I'm barely paying off a small amount of the actual principal. Majority of the payment that I make every 2 weeks is going to mostly interest. And so my thing is, how do I leverage so that I guess I'm paying more of the principal, not the interest? By I know we talked about art, but that's for the millionaire. Let's just talk about, my stocks or my real estate. Or like, how does the layman man or, you know, how do we, especially, if we bring it back to the topic of the whole podcast itself, the man help provide because that's what we're trying to do. We're trying to provide for the family, and how do we leverage things to be able to provide to the family easier, especially with this world of AI, which could be a whole nother conversation around where we go to and what you do. And but it is tee into a part of, okay, cool. We're thinking, how do we not become the teller at the supermarket while the self-checkout takes my job? But also, how do I now take what I am earning and leverage that to make more to do more to buy more, I guess, or
Well,
like
that's what we're talking
live
about here.
more.
You got to
Yeah,
invest
exactly.
10%, and that will grow, it will compound, and it will give you better choices and more things to do. But you just
Yes.
keep reinvesting it, right? Into different things. We talked about leverage, using other people's time, other people's money, other people's knowledge, right?
Yes.
So, get a freaking coach. And you go, how am I
Yeah.
going to pay him? Well, work out a deal with them, right? Work out a deal with them,
I
right?
couldn't pay a coach at one stage. I just traded her to coach her back.
There you go. There
So
you go.
weekly,
See,
we had 2 hours a week with each other. 1 hour was
yeah,
her coaching me, 1 hour was me coaching her.
perfect.
Because I had
Exactly.
something to give to her. So
There
yes,
you
I
go.
totally agree with that one.
Everybody has something to give.
Yes.
Everybody, right? You have people have an interest in something, they know a lot about it. Other people will pay to get that knowledge. You can do coaching about anything, right?
Okay. So we're trying
So
to get
you,
knowledge. We're trying to get knowledge from people.
well, some people already have it,
Yeah.
right? They're just not leveraging it, right?
Yeah.
They're just not leveraging it, right? So how do you leverage it? You know, create a website, uh, that says you provide coaching. Go on podcasts, right?
Yeah.
Start your own, write a book about it, right? Those things don't cost any money, right?
Yeah.
There's no reason why you can't become what I said in the beginning. You have to become an entrepreneur. If you don't, you are going to get left behind. So listen to what I'm saying. Your viewers need to listen. We've been saying this, I've been saying this for over 20 years.
Mm.
We're hitting a critical mass right now. AI, we have barely scratched the surface of AI. And you think about it, it wasn't that long ago, you didn't even know what AI was.
Yeah.
Billions of
Only a
people
couple
don't even know
only
what it is
only
today. They still
only
don't know
only
what
a
it is.
couple years ago I didn't have a clue what AI was. Yet I was still
And
using it
if
every day.
you don't use AI, you are going to get left behind, and it's going to hit you like a brick, right? Because the speed that AI is being developed is unprecedented, right? So AI is the electricity of the 21st century.
Yeah, I'd agree with that one.
That's how powerful. Think about if you didn't have electricity, what would you be able to do? What wouldn't you be able to do?
Well, you and
How
my,
would
you and
life
I
be
you and
different?
I wouldn't be talking to start with.
You and I are not talking, right? You couldn't have a cell phone. You couldn't turn the lights on in your house. You couldn't put the street lights on. There's so many things that we don't even realize that we need electricity for. And AI is the same. It's going to have that same impact. It's going to revolutionize the world.
So when I think of when I've watched all these podcasts and I think of people saying, "Oh, the rich people they leverage their money and they invest against their investments, their stocks, you take Elon Musk for example, he doesn't actually he gets paid in stocks and he literally borrows against all of his stocks or what they're potentially what they say they're worth. He leverages against that and that's how he pays for his day-to-days and so he actually pays no income tax at all
Correct.
because he's actually not getting an income because all his money is actually leveraged and he's
And that's what you
actually,
want to
yeah.
have. That's what the wealthy do. They don't have an income. They have
So
no income.
are we saying that me as the $65,000 a year person who is getting the salary doesn't have doesn't have a business yet can get that, or do I need to start a business and like have it actually being somewhat doing something in order to get this? Like that's where I guess my ignorance sits. I don't know what I don't know about this to be able
Yeah,
to leverage that.
you know how age is my Achilles heel.
It's where
Your
you
Achilles
have all the knowledge.
your Achilles heel is uh what did you say? Oh, did you say you're an ignorant? Okay, you're
Yeah,
ignorant. That's
ignorant,
your
ignorant. Yeah, there we
I'm
go.
just kidding.
Cool. Yeah,
You're a
no,
long
no,
way
no,
from it.
but it
You're a
is.
long way from ignorance, but
Yeah,
any more than I'm old, just so you know.
yeah,
Anyway, so
exactly.
okay, now I've forgotten what the hell I was going to say. All right, couple of things. Number one, uh, yes. So when you were talking about you're paying 6% interest from the bank, right?
Yeah,
So you borrow that money from the bank and you go and invest it somewhere and you get 12%. What's your return on investment?
six.
No, stay
Uh,
with me.
uh,
It's infinite because none of it was your money, right?
true.
You invested the bank's money, you paid them 6%, but you're now, so this is key. So, well, how do you calculate? How do you figure out what you're making? Well, that's called arbitrage. All right. So this is what banks do as well. So the arbitrage is you're paying 6% interest, but you're making 12% on the money. So your arbitrage is 6%.
Yep.
right? And so banks are always doing arbitrage. The banks borrow money from each other, you know that, right?
Yeah.
And then they invest that money, they give the money back to the bank, and the profit is arbitrage.
Yeah.
So in essence, what can you do that with? You could do it with your credit cards. Instead of buying crap that you never really want or need, use your credit as a means to either start a business that's going to give you a bigger return than the interest on the credit card,
Mm.
or loan out the credit card money to people who are investing in real estate or other things. And if you're paying, let's just say you're paying 7% on your cards and you
My
charge,
credit cards, I'll tell you, my credit card, I don't pay interest on my credit cards because I make sure that, again, the whole nother conversation of make sure that, I use them to benefit me. But if I do pay interest on any of the money on my credit card, it's 22%.
okay, so that's it. So now you can get now it depends on your credit score. So again, there's
Yeah.
things that it's dependent
And
on. This
depends on
doesn't,
where you are in the world because they don't,
it depends on,
yeah.
yeah. But let's just say, now you can get 0% interest credit cards
Yeah, and
up
you
the
can
yin.
leverage it and you can, yeah.
And then so you lend that money out, let's say 12%. Now you're building wealth and you're not using any of your own money. You're getting free money. But credit card companies know how many people are going to think of doing that?
Yeah.
Hardly anybody, right? And they don't care anyway, because if you use the credit cards, they make money when you use them anyway,
Mm.
right?
I
And
guess
so
that
again,
comes back down to our risk profile, what you're willing to risk on things as well. Is that correct?
so you got to mitigate risk, right? You've got to mitigate the risk. You got to have something you're really sure about. But listen, how sure are you that if you use them for what people normally use them from, that you're going to lose money? 100% guaranteed,
Yeah.
right? So people don't think about going out and buying a car on credit because it's what everybody does.
Well, for example, I use this in a way. So I've got a floating mortgage. A portion of my mortgage is floating, and I get charged, I think it's 8%, somewhere around that, 7-8% on that section of my mortgage. So my wife and I put all of our day-to-days, everything through the credit card, leave it sit on the credit card for that 30 days until we have to pay it off so we don't pay any interest. Then we pay the minimal amount that we have to off that credit card from the floating amount that is sitting in there. So we're not paying that 7% on that money for that 30 days. And in
Yeah.
turn, we are making the arbitrage is the 7% that we're making on that. So that
There
kind
you
of
go.
like what you're saying in a more basic kind of term, you're saying you can leverage this in even bigger, greater ways.
Yeah, that's a great idea. You're leveraging your money, which is good. The other thing you can do, and I don't know again if this works in New Zealand. I know nothing about the mortgage or banking industry in New Zealand, so this may not work over there. But here in the United States, you can take your monthly mortgage payment and you can split it in two and make two payments a month, and you will, yeah, it depends on the amount of money, but you're going to probably take 10 to 15 years off your payments just by
Okay,
splitting them.
explain that because I currently right now pay my mortgage is paid. I can decide how often I want to pay. I can pay it weekly, I can pay it every 2 weeks, I can pay
Yeah.
it monthly.
Yeah.
Uh, one of those three. Are you saying that me paying, which I do now, I pay it every 2 weeks, is
Yeah.
saving me money instead of paying it monthly?
I would check and make sure with your mortgage lender, but it should be, yeah, it should be saving you a ton of money.
Interesting.
Ideally, you want to pay your mortgage every 2 weeks.
If I can pay it every week, would that be even better?
Yeah, be even better. And you can pay the same amount of money, because if you think about it, you're shortening the amount of time that you're borrowing money. You're paying interest on the whole amount for 30 days. Well, what if you're only paying it for 7 days?
Yeah, so I guess it just depends on how they calculate their interest.
Yeah, so I don't know if it works the same way in New Zealand. I would think it would, right? It's an amortized
Here's
mortgage, right?
here's my one thing that I completely can say right now I've learned today is that I need to look at this. So guys, I'm learning new th this is like audience, there you go. I'm just gonna point that out there because I always say if you learn one thing from today, like, let us know or share it. I'm saying I've
Yeah.
just learned something that I need to look at. Okay.
Cool. All right. All right, man. Well, listen, it's getting late. I gotta go. We've been on this
Yeah.
for 2 hours. Any last question you want to ask me?
No, I guess that kind of sums up. We've gone through so many different things, and I'm glad that you've kind of wrapped it there because it is so important for everybody. And I appreciate all you sharing all that knowledge. I appreciate you telling myself and the audience all these different things. It is that leverage, guys. And I guess it's reach out to Steven if you want to learn more about the different like specific things for leveraging. I'm sure that I know that he's running things and he's doing stuff around that. That's that coaching thing. I know I will probably have a lot more questions in the middle of a podcast that I'm going to sit here and I'm going to literally email you and be like, yeah, but what about this, Steven? Like, oh, like, and then we can have another conversation.
No, but,
No,
no,
buts, no. But again, it's always that learning. That's why I ask those buts because I'm like, okay, but I know that there's a reason behind this, but I don't understand it. And that is my but. I don't understand it. I want to understand it. And that's why we had this conversation today. So, thank you, Steven, for that. If you want to get in touch with Steven, it was VFT23.com, wasn't it?
yeah,
Correct?
so just a note on that because obviously that's a whole different that's a book, right?
Yeah,
It's
that's a
about a
book.
book.
Yeah.
It's
But if
about
people
an
can people contact you through that
yes,
website if they
but
want
they
to?
can
That's
contact me. Yeah,
yeah.
they can contact me through the website. But when you go to the website, you're gonna go, what the hell is this?
Yeah, it
This
has
is not
nothing to
about
do with
investing.
investing. Yeah, it's all to do with a book. But it is an easy way to contact you when it comes
Yes,
to that.
it
So they
is.
don't have to go
Yeah,
hunting for anything else.
yeah. Or they can use my why don't I give you my email address so that it'd be less confusing for them.
Yes, very much so. Hang on.
It's S for Stephen, P for Paul, E for Edwards, the 20 number 23 at me.com.
At me.com. Cool.
Yeah. So I do wealth coaching, which Chris mentioned. I do also do all kinds of investment coaching as well. It's another side to my business. We originally met because I've just published a new book,
Yes.
which is called The Venus Flytrap, Sex, Lies, and Repercussions, which is very different from investing. So it
Yes.
would be easier and make more sense if you contact me through email. Anyway, so
Yeah.
yeah, hopefully
I'll
that
put
helps
I'll
people.
put your email down in the description so people can grab that straight off, and there's less confusion. If they have any questions, they can email you, or they want to learn more, they can drop you an email. I appreciate you, Stephen. Thanks you for what you're
Man,
doing.
always
Thank you for
great speaking.
coming back and having this conversation. It cleared up a lot of stuff for me. I know we went down and probably created some more questions for people that don't know stuff. But again, that is why we're doing this. So it creates questions that you go search for the answers and then most importantly, actually implement it.
That's so true, man. Well, listen, it's always a pleasure spending time with you, Chris. I really enjoyed it as usual.
Yeah, we will do it again, I'm sure, at some stage. Thank you again, Stephen. Thanks for today.
You're welcome. You're welcome.